How do banks keep you trapped in debt? In a world where loans and credit cards promise opportunity and freedom, the reality is far grimmer for most people. Behind the shiny advertisements and promises of financial freedom lies a system meticulously designed to keep you paying and paying for the rest of your life. This isn't just about poor financial decisions. It's about a system built to profit from keeping you in debt. Welcome to the world of debt slavery, where banks hold the chains and you're left holding the bill. Let's start with how the system works. Banks are in the business of lending money, but let's not pretend they're doing it out of the goodness of their hearts. Every loan, mortgage, or credit card balance you carry comes with an interest rate, which sounds like a fair trade-off. But is it? Interest rates are often set so high, you'd think the banks were trying to win a race against inflation. For example, the average American household carries over $7,000 in credit card debt, with interest rates often exceeding 20%. Let's put that into perspective. If you only make the minimum payment, you're barely covering the interest, let alone the principal. It's like running on a treadmill set to never stop. And let's be honest, who loves treadmills? How did we let this system get so entrenched? And why are we still running? The truth is, the system is designed to keep you running, to keep you in debt. And the banks, they're the ones who benefit from your endless run. Now, let's talk about mortgages, the so-called American dream, wrapped in a 30-year commitment. Homeownership is sold as the ultimate milestone of success. But for many, it becomes a decades-long financial nightmare. A typical 30-year mortgage means you'll pay more than double the home's original price in interest over the life of the loan. And if you think adjustable rate mortgages, ARMs, sound like a good deal, think again. These loans start with low teaser rates that eventually balloon, leaving homeowners drowning in payments they didn't see coming. Imagine walking into a dealership, buying a car, and being told the price will triple halfway through your road trip. How many families have lost their homes simply because they trusted a bank's fine print or didn't have time to read the 50-page contract? The emotional toll is immense. Families are uprooted, children are forced to change schools, and the stress can be overwhelming. Seeking financial advice can help, but often it's too little too late. The damage is done, and the dream of home ownership turns into a nightmare. The mortgage trap is real, and it's a cycle that keeps repeating, generation after generation. Then there's the student loan crisis, a financial horror story for an entire generation. Americans owe over $1.7 trillion in student loan debt, more than credit cards and auto loans combined. It's almost poetic. You go to college to get a better life, only to spend the rest of that life paying for it. Interest on these loans compounds over time, which means you could end up owing more than you originally borrowed. It's like signing up for a gym membership, where every missed workout adds to your bill. And let's not forget the predatory lending practices that target young, impressionable students who are told, this is the only way to succeed. How did we turn education, something meant to empower, into a lifelong financial burden? But banks don't just prey on the young. They also target the desperate. Payday loans and predatory lending are their weapons of choice for people living paycheck to paycheck. Payday loans come with interest rates that can reach a staggering 400%, turning a small loan into an insurmountable debt. It's like borrowing a cup of sugar from your neighbor and owing them your firstborn. And while payday lenders might seem like the villains here, many of them rely on traditional banks for funding. Yes, that's right, your friendly neighborhood bank might be indirectly profiting from these exploitative practices. How do we combat a system that preys on desperation while pretending to offer help? Education and awareness are key. By understanding the traps set by these financial predators, we can make more informed decisions. Community support and financial literacy programs can provide the tools needed to navigate this treacherous landscape. Together, we can break free from the chains of debt and reclaim our financial independence. And then there's the bait rewards programs and special introductory rates. Have you ever wondered why banks seem so eager to give you cash back on purchases or airline miles for every dollar spent? It's because they're betting you'll slip up. A missed payment, a maxed out card, or an overlooked clause in the terms and conditions means more fees, higher interest rates, and ultimately more profit for the bank. These rewards are nothing more than sugar-coated traps. It's like offering a free appetizer at a restaurant while secretly adding a $100 service fee to your bill. How many people have been lured into financial quicksand by the promise of a free vacation or cash back on groceries? Even bankruptcy, the so-called last resort, isn't an escape for everyone. While bankruptcy can wipe out some debts, others, like student loans, are notoriously hard to discharge. Filing for bankruptcy also comes with its own set of costs, including legal fees and long-term damage to your credit score. It's like trying to climb out of a hole only to discover the ladder is made of jelly. For many, the system feels designed to punish them for even trying to start over. Is it any wonder so many people feel trapped with no way out? Banks don't just control your wallet. They control the rules of the game. Through lobbying and campaign contributions, they ensure that legislation protects their profits. For example, bankruptcy laws have been tightened over the years, making it harder for individuals to get relief from crushing debts. Meanwhile, regulations on predatory lending and high interest rates are often watered down or blocked entirely. It's like playing a game where the referee is on the other team's payroll. How can we fight for fairness when the system is rigged from the top down? At its core, debt slavery isn't just a financial issue. It's a control mechanism. When people are weighed down by debt, they're less likely to take risks, speak out, or pursue opportunities. Debt keeps people tied to jobs they hate, relationships they've outgrown, and lifestyles they can't afford to change. It's a silent chain that restricts freedom while enriching those who hold the keys. It's not just about money, it's about power. So what's the solution? Some argue for systemic reform, caps on interest rates, stricter regulations on lending practices, and expanded financial literacy programs. Others call for more radical measures, like universal debt forgiveness or the abolition of student loans. Whatever the path forward, one thing is clear. We need to change the narrative around debt. It's not just a personal failing. It's a symptom of a deeply flawed system. If this video opened your eyes to the hidden mechanisms of debt slavery, don't forget to like, subscribe, and hit the notification bell. Your support helps uncover the stories they don't want you to know.